Good morning, everybody. Welcome to our Thursday questions and answers session. Today, we're going to be talking luxury goods, LVMH listed in France, and I'm going to hand straight over to Fiso. Unfortunately, we have an issue with the charting software, our charting software, the charting engine, and the permissionings changed somehow with AWS cloud services that were out, and we're struggling to get the charting engine to get the correct data into those graphs. So we unfortunately don't have a graph from Viewpoint where we can draw lines and stuff, but I did pull a graph on Bloomberg just to have a quick look at what's happening in the share, and I'll convey that to you after Fizo's presentation. But in the meantime, Fizo, thank you very much for taking us through these numbers.
All right, perfect. Good morning, everyone. I am Fiso Mboto, like Sorrel said, and we'll be taking you guys through our LVMH company update report. Just a little bit of a note. The company is listed on the French market, but we specifically speak when it comes to the share price on the ADR, which is in dollars. So it doesn't change the crux of the company itself. But once we get to the valuation section, you would have seen in the report as well, specifically in dollars and not in the euros that the original share is actually listed in. But does not change the crux of the business. It's just a different kind of listing. So on the summary side, so we see the business as very diversified. It's been supported by performing markets over the last 3 years, and it particularly has strong fundamentals historically. And we think that there is some upside potential to get those strong fundamentals a little bit stronger, given the sort of pivot point that we've seen when it comes to the results over the last couple of weeks. So we have an intrinsic value of about $165 per share with an upside of about 21%. When we released the reports, that share price was at about 136. Right now it's at about 144. So we have seen a little bit of a squeeze on that upside number, but the crux of our thesis and the crux of our view actually still remains exactly the same. Now, our recommendation is based on the business having diversified exposure globally, and both in soft and hard luxury, along with exposure to luxury beverages. So now the diversification aspect actually plays a really pivotal role in the results. And I'll get to that part when I show you the slide, but the crux of it is like this. When it comes to hard luxury, there has been a particular trend around watches that we've seen with Swiss watch exports that have gotten negative over the last 12 months. However, LVMH has exposure in both watches and jewelry. Specifically on the jewelry side, it has Tiffany & Co., and that has played a very strong supporting role in the segment, which is why that segment did quite nicely sequentially over the last 2 quarters, and then also nicely in the third quarter. Then the luxury beverages as well. It's almost a similar story. When it comes to booze, we've seen with Diageo that volumes have been a particular issue, but there have been particular issues specifically around the beers and the spirits, whereas LVMH actually has exposure in spirits and in wine/rosés. The wine/rosés are the ones that actually did quite nicely, which sort of exemplifies the benefit of being diversified in the right places with the right products, which is where LVMH is. Now, what does, in context, all of that do? It provides some stability against shocks from input costs and also demand trends, where you might see, like we saw with the watches, a decrease in trend, but you've got the balance of the jewelry side actually putting a balance on the performance of the segment overall. So that's really where the diversification actually plays a very pivotal role. The other one is a positive wealth effect. So that's supported high net worth individuals over the past 3 years, given how markets have performed. We have a slide on that as well, but it's almost a trickling effect. So what you see is markets do really well. The wealth of high net worth individuals is linked to the performance of the markets at a larger base, and that filters down in the propensity to actually buy stuff and hence demand, and then that filters into the performance of the luxury space and LVMH overall. So typically, directionally, it's not a very strong relationship, but it does have an indicative use, is that when the markets do well, so does the demand of the luxury in the luxury space, because of the sort of bigger pockets coming out of those high net worth individuals. So there's a big filtering effect. The other one is that the business seems to have reached an inflection point now across regions and segments. What we have sort of seen in the last couple of years is a little bit of luxury fatigue. where the luxury guys have increased their prices quite aggressively, and we've got to a point where the consumer started to pull back on their spending, which is why we saw a little bit of a detraction coming out of the top line, coming out of the margins, and also coming out of the earnings. But what we have seen now, sort of a turning point of that, where we can expect those earnings, those margins, and that top line to start actually moving up, positioning the stock quite nicely to take advantage of that upside potential. Last but not least, its continued brand strength. So in the space of luxury, brand and products matter, which means innovation and IP is at the pinnacle of performance, which is what LVMH has done consistently as well. But we've seen the release in some of the fashion and leather goods products and some of the jewelry, some of their cosmetics and perfumes. Consistent bringing of new IP does have a direct relationship in performance, and it really puts LVMH apart in the luxury space as one of the leading, the leading luxury companies. Now, valuations. It's typically the starting point of any argument when it comes to the luxury guys, because they're typically expensive. Now, we view LVMH as a quality stock. It's got some upside potential from those strong markets. It's got very good fundamentals. We expect to be a little bit better. And then that inflection point, which has really seen some good momentum into its segments. And I'll show you a chart on that as well. But what we're really trying to look at with the slide is these three PE charts in context of each other and why you really see LVMH see it. Start with the slide, start with the chart on the far left, right? LVMH. When you look at that PE number, it actually looks quite a little bit excessive. It's above the average. It's getting close to that one standard deviation above the average. But the context is that big boost is actually leading up to the results we saw about 2 weeks back, where the share price actually had a really, really good, strong performance. Now, what does that mean? It means, yes, we do realize that there has been a little bit of a jump when it comes to the PE/valuation of LVMH. But the context here is that when we think about the valuation, we actually spread it out into three different scenarios: your base, your bull, and your bear. And for us, on a risk-adjusted basis, considering a scenario where that PE goes to 19, considering a scenario where the PE goes to about 23, 24, and considering a scenario where the PE goes to about 28, we still see some upside potential in the company on a valuation perspective, and then thematically as well in the medium to long term, still see it as a quality stock. It should perform quite well from a fundamentals perspective, and also see a little bit of demand uptick with these strong markets that we have been seeing. Let me contrast it a little bit to Hermes. Hermes is sort of the top of the cream. Sorry, the cream of the crop when it comes to the luxury space, because it performs quite well on margins, on earnings, on top line as well. But the reason we like to compare the two is because Hermes typically trades at twice the valuation of LVMH, which gives us a little bit of context, because the two companies are similarly diversified in products and in regions. Hermes just typically has higher margins, but the quality is still reflected and seen in LVMH as well. So if you want exposure in the kind of quality that you would see in a company like Hermes, but can't really get to stomaching that 46 PE, LVMH actually puts in a really good bargain when you look at the theme around the medium to long-term growth around the company. Then we add Lululemon for context. And here we understand that Lululemon is not a luxury stock itself. It does have high price points, but the context we're actually trying to add here is risk reward, right? Lululemon is over-indexed on the US side. And that's actually been part of the thesis, that it's going to move out of the US, diversify, and do quite nicely in that international business. However, what we have seen over the last few months is the increase in competition around the US, as well as the impact on tariff costs. Now, Lululemon can absorb those costs. Their margins are quite high. But the risk reward when we're looking at Lululemon versus an LVMH is a little bit different, because LVMH is a lot more diversified when it comes to products. It's also a lot more diversified when it comes to regions. So even though you might see a lot more upside potential in Lululemon, it comes with an absorbent amount of risk versus an LVMH, where we see the upside potential, but we also see the stock as high quality, strong fundamentals, and should benefit from well-performing markets in the medium to long term. Then segmental performance, because that's what this company update report is about. Really what happened with those results to give us the view that we have right now. So what we saw was some resilient performance across the sectors, with that diversification playing the saving grace. So we're going to go from left to right. And the idea here is to look at number one, the sequential performance from Q2 to Q3. And then number two, the theme around each segment and why we view it the way we view it. So wines and spirits, right? From Q2 to Q3, it went from -4 to +1. That is good momentum when you look at the context of things. Now, what is that context? Wines has been doing really well, but spirits has not, primarily because of the trade tension between the US and China, which also happen to be the bigger demand areas for the spirits. Now, what does this mean? It means that the wine side of the business or the segment is actually doing well, and the spirit side actually provides good low base for upside potential over the long term, given the brand strength of LVMH and the kind of stance it has when it comes to its client base on the cognac side. Fashion and leather goods, it's about 40% of the business, sequentially doing quite nicely. It was down about 9% in Q2 and it's down about 2% in Q3. Now, they're both negative numbers. It's not something we can avoid. But the idea here is to look at the change in momentum and in the context of what it should mean for the full year of 2025 and then the coming years thereafter. What does it mean? It means that we've seen better performance in demand in that segment in Q3 than we did in Q2. And we suspect that over the full year, we should actually see that number getting much more better than that -2% sequentially in the fourth quarter. Then perfume and cosmetics typically does well, did really well as well in this quarter. Went from about +1 in Q2 to about +2 in Q3. Typically good performance. Watches and jewelry is the other one where the same segment has sort of two different trends and the balance of jewelry is actually doing justice for the watches. Now, what does this mean? Watches has again seen sequentially some negative performance, and we've sort of seen it with where Swiss watch exports have actually been going over the last 12 months. But the balance for LVMH, where diversification has a good play, is in Tiffany, the jewelry side of the business, which has done so well that is not just balanced out the negative performance of watches, but it does actually also have the performance of the segment get positive. It says it has the same play as wines and spirits. It means that the watches side of the business has a very low base, and the upside potential there becomes a little bit higher, over and above the fact that the jewelry business is a quality business. Then you've got selective retailing, which is mostly just Sephora. So it's an extension of skincare, not exactly perfume and cosmetics, but really more on the skincare focus side. And that typically does well. Went from being a +4% in Q2 to being a +7% in Q3. So their stellar performance typically doing quite nicely. Then from a region perspective, there also is a little bit of added context. So we've got a little bit of mixed performance, but the idea and the overall trend actually remains positive. And what is that? It's actually split into two: local demand versus tourist spend/tourist demand. What we've seen in 3 out of the 4 regions is that both tourist and local demand has actually done quite nicely, which is why we've seen the sequential performance actually be a little bit better in the United States, in Japan, and in Asia, excluding Japan. The only place where the tourist spend actually saw a little bit of a detraction, which impacted performance, was in Europe, which is why we saw Europe in the third quarter go to -2% growth, whereas in the second quarter it was -1. But in the context of local demand in Europe, the -2% actually is not that bad. And when you consider that over the 9 months it's flat with just local demand, under constrained circumstances in the European region, that performance is actually really good. And when you compare it to consensus as well, it's pretty good. So now just looking at the rest of the other 3 segments, the United States doing quite nicely, was flat in Q2, up 3% in Q3. You can sort of see the trickling down effect from markets to high net worth individuals to LVMH, where the US market have actually done well in the year to date. You sort of can expect that the performance in Q3 should do quite nicely. Then Japan. Japan has a little bit of context. Now, -28% is a big detraction. -13%, also a big detraction. But there's 2 very important things to take note of here: the sequential improvement in momentum from -28 to 13. And then number 2, last year, Japan was the booming place to be, primarily because the Japanese yen weakened quite a bit. So you saw a lot of Chinese tourists, a lot of tourists from all over the world coming to Japan to spend in Japan because it was cheap to be in Japan. So even though there was a little bit of a detraction in growth, that minus 13%, it's not something we can avoid. The context there is that there were actually very, very high comparables to last year. So seeing improvement from Q2 to Q3 is actually very positive overall, purely because of that high base from the prior year. And then last but not least, Asia excluding Japan, which a good portion of it is China, which is a positive 2% over the quarter. Now, what is important here? What's important here is that over the last couple of years, there has been a distinct risk around exposure in China because of where the consumer has been for a while in that region. And what we're starting to see here, specifically for LVMH, is a little bit of an inflection point where they went from about minus 6% in Q2 to a positive 2% in Q3, which is stellar performance when you consider the context around the demand in China, and then the rest of the Asian regions as well. So overall, you can sort of see that there was a little bit of a mixed performance contextually, but overall, the trend does remain positive when you look at these regions in separation, what has really happened from Q2 to Q3. Then just to speak a little bit about the trickling down effect of the wealth effect. So this is supposed to be illustrative, more picture than science. And the idea here is to show you the directional relationship. It's not entirely perfect, but the idea it shows is that when you see strong performance out of the markets, you typically see strong performance coming out of LVMH as well. I used a few proxies here to take into account the different regions. So the S&P is more so the US, Stocks Europe 600 is the whole of Europe, CAC 40 is just France, Nikkei is Japan, and then the Hang Seng is China. But the idea here is that when you look at the directional relationship and where markets have been so far and how markets are expected to perform going forward, you can sort of see that LVMH is positioned quite nicely. The counter to that argument is that LVMH is a discretionary stock, which means if the market experiences any kind of negative shock, we should expect LVMH to also experience an above average negative shock. But we've taken all that into context. What we have taken into context again is those three scenarios when it comes to valuations to give us a little bit more comfort, where we do take a look at what happens if markets go down, demand goes down, they can't maintain their margins, costs go up. That would be our bear case. But still, on a risk-adjusted basis, we still see some upside on the company. Then I get into our almost final point is margins. So the margins usually tell us really the quality of the company, because if you can maintain your margins, it typically means you've got a good stance in your customer base and good control of your costs. And that's really where LVMH actually stands. We also contextualize it with Hermes, which is sort of the highest quality luxury stock, and then Lululemon as well, because we've already included it in the next 12 months chart. And it gives us a little bit of context when it comes to risk versus reward as well. Now, we want to look at the gross margin to get a little bit of context. The black and the blue line, that's what we're looking at, Hermes and LVMH. And what you're seeing over the last 3 years is actually a little bit of a detraction margin-wise. What's important to note here is that it's not stock-specific. It is sector-specific. What this means is that even though we're seeing a little bit of a detraction in LVMH's gross margin, we saw a little bit of a detraction in the last 3 years, Hermes experienced a detraction in a similar fashion. Which indicates that it is a bit closer to a sector issue than it is a stock issue. But that was primarily because of a luxury fatigue, increasing those prices quite aggressively. They did have a little bit of a cost issue. They use a lot of gold. They've got a lot of input costs, so that's gone up a little bit as well. And then they had a little bit of a crunch when it comes to top line demand. So you can expect those margins to come down. But what do we expect going forward? Because that's more the important part. So we've seen that the luxury fatigue is sort of done. We are looking at the stock, looking at how it's performed. When we see the change in momentum from Q2 to Q3, and the context we're seeing over FY25 overall is sequential improvement. We expect sequential improvement over the full year and also sequential improvement into FY26, which is why we see these gross profit, these margin numbers as they are at this point, but expect them to start ticking up. And also getting a little bit of confidence from the cautiously optimistic management tone, because the luxury guys typically don't give guidance overall. Valuation. So that's sort of the second last point before I hand over to Sarl. So we recommend a buy for the stock, given the growth potential, stock quality, strong fundamentals. We expect to strengthen a little bit more, but the context here is more so on the table, and then we'll touch a little bit on the chart. The table just looks at our bear, our base, and our bull case, where sort of spoken about, we want to take into consideration what would happen to the share if everything went wrong, and what would happen to the share if everything went right, and then our weight adjusted IV and how we land to that 165. So the idea here is to really take into context the kind of risk we take, because it's such a discretionary stock that has a little bit more of an above average impact when it comes to movements in the markets and demand from their consumers. We've taken that into consideration in the bear case, and in the bull case, where we see markets to continue to perform, we see top line continue to perform as well, and then take into consideration the base and end up at an IVR of about $165 with that 21% upside. Then there's context versus consensus. So when we look at consensus, we typically like to take it with a huge grain of salt, because the update of that number is typically lags. So the $134 a share we're seeing in consensus right now might actually be a little bit higher once the luxury sector finishes its earnings season, and that 165 might not look as high relative to consensus anymore. Then lastly, you just look at the chart at the bottom, because it contextualizes why we think LVMH is sort of well priced at this point. If you look at the last 12 months performance, so we can almost X out that Lululemon and really look at Hermes, which performed okay, or we expected to, because it's one of the higher quality luxury stocks. And then we look at LVMH as well. It's sort of flat over the last 12 months, but over the last 12 months, it's been quite grippy when it comes to the performance of the stocks quarter on quarter. You sort of see we sort of saw when you looked at quarter one versus quarter two, there was a little bit of a sequential movement there. But into quarter three, we saw a positive change in momentum in the sequential performance. And really that gives us a little bit of confidence in what to expect over the full year of FY 25, as well as the medium to long term, because we like to look at these stocks on the medium to long term. But the crux of it is that we believe that the stock has a good amount of growth potential. It's got a lot of quality when you look at the margins from top to bottom. Also, it's got strong fundamentals and a strong balance sheet. We think that there's a good amount of runway in terms of upside potential, and where it's priced at this point, we see it as attractively priced to get a nibble at these levels. So that brings me to the end of my side. So I'm just going to hand over to Sarl to take you guys to that technical that he took from, I think, Blimmies.
Yeah, thanks, Fiso. Like I said, I do have a chart. I don't have any lines on it. I don't know. Can you guys just confirm that you can see it?
Yeah, we can see it.
All right. So this is basically the 2-year chart for LVMH. We see the high sort of around January of this year, around 762, dipped down to 436, and currently back up around 625. So slowly making its way up to the previous highs, and could possibly get there and add the 20% or 22% that Fiso says sitting in the numbers. So kind of agree with the trend is definitely up. It is in a bullish trend. And I kind of agree with your analysis, Fiso, that there's about 20% upside in the stock. That said, I can't wrap my head around why people buy these products. I get watches. You buy a luxury watch, you can buy a Rolex tomorrow and it'll be worth more the day after. You can buy a Ferrari and it'll be worth more the day after. But flipping buying a handbag maybe to adorn the lady in your life. I've come close. I was in Paris and I probably had a couple of Pinot Noirs too many. But my wife luckily declined, so I didn't buy the handbag. But I saw a guy the other day in the street wearing a pair of LVMH sneakers, and I thought to myself, yes, I'm going to go check what those things cost. And to pay 44,000 Rand for a pair of sneakers, you must be a nut job. Speaking of which, they had a thing, it was in the news 2 or 3 days ago. They've now launched a limited edition product, which is basically Nutella. It's a chocolate hazelnut spread, which they packaged with some French pastry chef. They call it Les Chocolat Maxime Frédéric at Louis Vuitton. Flippin', you pay $1,100 for a tub of Nutella, and they say because it's limited edition, some of them have sold on the black market for 30,000 Rand. I mean, why would you do that?
there is an answer to your question, and it's not a very great answer. And
Give it
it's
to me.
that
I don't understand it.
people buy those products mostly because they can. Because in greater context, you have to look at um your pocket relative to the product. So for them, buying a 44,000 rand shoe is almost the same as you going to, I don't know, sports scene and buying a shoe. For them, that's the norm. That's
No.
really where the answer actually lies. If you can buy a 50 grand bag and it makes no difference to your life, why wouldn't you? And that's really where the context actually is as to why people buy these things. Because it doesn't make sense, but it makes sense to them. The same way
Yes,
that
I hear
when
you, Fiso,
you
but
want to
I
buy a
mean,
shirt, you just go to the store and buy a shirt. For them, it's when their Versace shirt is a little bit old or feeling a little bit tight, they just decide, oh yeah, I'm just gonna go and buy another LV shirt. That's it. For them, that really is it. It's mostly because they can. There's a little bit of element of status as well. Like you can see specifically with the handbags. If you've got a Birkin bag from Hermes, you're doing really well. But for some of them, it's just a matter of they just can.
buddy, spending 44,000 rand on a pair of sneakers, you could probably use 10% of that to go to a good shrink to fix your self-image. So I don't get it. But be that as it may, this company has been around for a long time. The numbers show that they continue to gather support from the rich. Maybe it is a question of the middle class falling away, and you'll only have rich and poor, and the rich will keep on buying, like Fisa said. They'll keep on spending in these areas. From an investment point of view, possibly makes sense to go long a couple. From a diversification point of view, possibly makes sense to go long a couple of Louis Vuittons, but me, from a rational point of view, I just can't figure out why people buy this stuff.
I think the other way to think about it, Sorrel, is remove the rationale around the pricing of the products and look at it more around the demand of the products. Now, once you start removing the tagline of the price and you look at the demand aspect of it, then in the luxury space, there is one of the big assets is actually scarcity. And once you take that element into consideration as well, then remove the tag price, you can sort of see, okay, well, if they produce 50 bottles of that special Nutella and I can't buy it, I have to go buy it in the black market now, I might as well just pay up and buy it from LVMH themselves. There's also a scarcity aspect of it that does take into consideration. So the rationale around the pricing, yes, it's a big elephant in the room. But the idea is to more so focus on the quality of the company, the fundamentals of the company, as well as the demand aspect of it. Is there actual demand? Whether you're buying a 45 rand sneaker or a 450,000 rand sneaker, it's all the same as long as there is demand, and that's what they're banking on, the demand.
Yeah, as a retail investor, I suppose you should focus on the demands and the numbers that these people produce.
Yes.
It's just for me as a logical oak, I'd rather buy Mr. Price, mate. they've got demand, their price is cheap, people are going to carry on buying their stuff for a long time, they're going to make money. So, yeah, that's just how I see it, but that's completely actually off the topic. I mean, the topic is that there is demand for the stock. The price is fairly valued, I suppose. It is in an uptrend, and it looks like it's going to go higher. Thanks, Fiso, for your input. Let's hop in there. I see we've spent a lot of time today. Yes, we're over half an hour already. Let me pop in there and see if there are any questions. Is it possible to buy LVMH through the PSG Wealth platform? Yes. If you have an offshore account with us, Alex, you can pop over there, type in the share code MC, stands for Moet Chandon, MC France, and then fire away. You can absolutely buy it on our platform. Right, Alex further says, I wonder if LVMH will perform if there will be a recession. Probably will, Alex, because as Fiso have said, these rich oaks don't really get dirt.
There is a little bit of
recessions.
There's a little bit of context to that. So it is a discretionary stock. So we do expect that if there is a big recession, there should be a little bit of decrease in demand because it sort of filters down. When your markets do badly, the pockets of the wealthy gets a little bit less and then the demand gets a little bit less. But the idea around the luxury stocks is more so on the quality of the business and then also the strength in their customer base. Now, will there be a detraction in demand? Of course, it's a recession, but it's not going to go down to zero. And they're not going to lose their main customer base. What you should be looking at under circumstances like that is actually margins. Were they able to maintain their margins? Were they able to increase their pricing? Because that's going to tell a big, big difference.
I see Piers also popped a chart in the chat for us that he got from FactSet to show how they probably would react in a recession. Thanks, Pierre.
Yes. So you should expect a little bit of a pullback, yes, because it is a discretionary stock. But the idea is to look at the quality of the company, the margins, the fundamentals. Are they able to withstand recessions? Because that's the important part as a discretionary stock.
Yeah, I see Pierre has also popped a chart in there that shows that it's crossed through its long-term moving average, called the Golden Cross. So definitely the bull part of the equation is in play here. Then it says, Alex says people buy luxury goods to be labeled as exclusive and to be admired, I suppose. I totally agree with you, Alex. Linda says people buy emotion. And I think you're right, Linda. I think people make emotional purchases. And if you buy something that makes you feel better, I suppose, good for you. Maybe it's because I'm batting from the cheap seats. that this doesn't make sense to me, but
it is because the other thing to consider, Sorrel, is that when people are buying from these luxury stores, they're not buying typically online. It is a whole experience. So once you get to that shop and they want to present you the bag, you get the full experience. And that's part of what they're trying to give. That's part of the luxury experience.
Yeah. No, I remember that night in Paris. I mean, walking through the door and there's oaks. It look like bouncers all dressed up, and it was a special experience, but very expensive though. Right, guys. I don't see any further questions, and we're almost 5 minutes over time. Thanks for joining us, Fis. Thanks for all your insights, mate. Thanks, Pia, for adding for us in the chat here on the side. Much appreciated. We'll be back next week, I think, with Marnus and BHG. Am I right, Marnus?
That is correct, Zorro.
Yes.
Okay. Lucky. So we will see you next week, Thursday. Same time, same place. Looking forward to hosting you. Have a fantastic Thursday, guys. Cheers.
Thank you. Cheers, guys.